on to this rally. But right now, again, the S&P's at 52.58. Headed into the number, we were at, 52.28. So we added on 30 points. Let's bring in Alan Nuckman. We have the Chief Market Strategist at BullseyeOption.com joining us. Alan, the market likes this one.
Yeah, it's a nice, healthy bounce. I mean, we were near unchanged, and last night we were underwater. So, is this a test and reject at that low? Like a lot of times, you'd like to see more of a capitulation, and we'll see. But at 54.20 is the halfway point in the E-mini from the all-time high at 57.20 to that 51.20 deep dive. And so the question is, test, reject. But more importantly, let's look at how much the VIX has come down, because I always look for bullish divergence when if we test the lows, is the VIX at the same level it was or a higher? And if it's not, then that's a sign that it doesn't have as much conviction to the downside.
Yeah, the VIX is still hanging in there. It's at 27.83. It was right around 27.73, I think, into this.
Okay. But where was it on Monday, my friend?
Oh, okay. Well off those levels for sure. Yeah.
Okay, that's what I'm talking about. Where, in comparison, it's not even half of where it was. So the emotion is not here at these levels for right now. So, let's see how it stabilizes. But it's looking like Monday could have just been a one-day event. And you and I have been talking a lot about I was expecting, or my expectations were for a dollar dive, and that to change the paradigm. I didn't know what was going to cause it, and I've outright said that to you. I don't really care. But, when that yen carry trade unwound, it was just an example of we had every market across the board was crowded. The metals were crowded, the stocks were crowded, the interest rates were crowded, the currencies were crowded, and we all know what happens when that is the case.
Yeah, no, I mean, one could argue sustainability was definitely a hardy discussion to be had, right, and a reasonable one for that matter, as the S&Ps were ripping up to 57.21 amidst some of the uncertainty, even that the Fed was kind of communicating, right? They were talking about data dependence, and that doesn't really provide a lot of foundation for the market to stand on. I feel like if it's kind of on a number-to-number basis, if they're still looking for good data.
It got the exact data it wanted, and careful what you ask for.
Yeah.
I always say that to my wife, be careful what you ask for.
Because
you got exactly what you asked for, and now you didn't want it. Now we're getting 2 half-point cuts in a row, and now people are like, oh, well, that's not what I wanted.
Too much too fast then, I mean, but Alan, one could argue in some ways, just take a look at the chart real quick, because 5,500, if we start to balance here, if we establish a bit of a range around this. Now, again, we're kind of extending the extreme of the idea of this being the range, but 5150 is a key level and it seemed like it's still intact at this point. I was arguing earlier on the show, if you're trading the 60-minute candle chart, I mean, you're kind of, I think, hanging on a thread here right now, talking about if you're still trending higher. That seems to be invalidated by some of the bearishness we've seen, but the longer term, the daily and even the weeklies, one could argue, the bulls still have something to hold on to here, I guess, is the best way of putting it.
When you talk about the bulls, you're talking about me, okay? We've been in a 50-year bull market, okay? Let's talk about where we are. Ben, I'm going to give you a number, 666. That was the low in the S&P back in 2009 on the financial crisis low. That was 680% ago, my friend, okay? 680% ago. Monday, I'm not even going to use the C word because it's insulting to the C word. Okay, Monday was a 2.5% move. That's it. That's all it was. We're now 6 or 7% away from the all-time forever top. You gotta, after rallying 75%. So you gotta put this in perspective. Just like your last guess, it's about perspective. I know people hate giving back gains, but unless you got in, unless you put all your money in the market 2 weeks, 2.5 weeks ago, you're still ahead of the game, my friend. Ahead of the game.
Okay, speaking of ahead of the game, and I would argue that as well, Alan, the longer-term chart, as I was suggesting, does still indicate that the bulls are in charge here, right? And it does sort of indicate that if we were to start to balance out, find a little bit of footing right now, establish something a little bit more sideways and less kind of in that downward type trajectory, this could be very healthy, right? You can see, to Alan's point here, I'm going all the way back to 93 here on the left side of the chart, Alan. Pretty easily identifiable bottom left, top right.
Pretty easy.
Hey,
I'm not even going to get into that discussion, but the point is the markets have to pull back to gain energy to move higher again, and nothing has changed. Rates are coming back down. A lot of all of the markets got whacked. So it wasn't just the S&P. And I looked at it as it's the boat theory. Everybody's on one side of the boat. Everybody on one side of the trade. You know what has to happen? It has to tip, and that's what it did. And so it's important to see how the markets react, not how they act. We haven't gotten any follow through. Even Japan bounced back 10% the next day.
What do they scream? Is that mass is coming about or something as they're shifting? Isn't that sailor talk, like nautical stuff coming about? I think it is. Look out, drop your head down because this thing's about to swing around. But hey, real quick.
Exactly.
Swinging around is, again, kind of what the market's doing here and maybe not necessarily at concerning levels at this point. Go ahead.
No. If 54.20 is the midpoint of this range, and we get above the midpoint, that's the midpoint magnet.
I like that.
We get above that midpoint of that range, then it's going to go to the range top. And if it makes a full V recovery, then it's going to add on 600 points. We're going to be at 6,300. That's happened every time in market history. Every single time in market history. Until it doesn't.
I've always said Alan Nuckman's the second most half-glass full guy I know in the industry.
I think I'm more optimistic.
I'm not going to tell you who I compare you to right now because
it hurts my feelings.
Yeah, it'd be insulting in itself. Hey, but
I am a bull.
Talk to me, Alan, about some of the other markets you watch because I know you're a big commodities buff as well.
Yeah.
We were talking about crude, kind of in a balance here around 75 right now. Grains have been getting smoked, I saw. What else is going on in terms of some of the other markets?
Grains are their own, we plant the seed, nature grows the seed, we eat the seed. But that's its own market, it's supply and demand, yes, but it's more, I think,
like meats used to be and
more about nature, and weather, and I'm no Tom Skilling. So, but to get to other markets, crude oil, I said, crude oil's been between 65 and 85 for a year and a half, 75. See how we watch 75 on a weekly basis, and it's still held.
Yeah.
So I think gold is really interesting because it's made a series of higher lows and lower highs, so it's coming to an apex here. And what's the big story of everything that happened in the last week? The biggest story is the dollar is getting crushed. All right, so the dollar down, that eventually people will. That'll be helpful to all commodities and especially gold. And maybe we'll get to come back in silver. We'll get to come back in copper. For all these, we'll get to come back in crude. For all these commodities, they got beaten down because, you got to think about when it comes to the carry trade in the yen, they were borrowing money with their yen and they're using that for other markets. So when that unwound, they had to come up with, they had to get out of other commodities and they had to get out of other positions that maybe they didn't want to, but they had to. Okay, well, gold definitely has been kind of feeding into what you've been talking about in terms of commodity rally for a while right now. We'll see if some of the other products participate a little bit more willingly or heavily, I guess. But Alan, we're going to hop. Appreciate you joining us. A lively discussion with Alan Nuckman, Chief Market Strategist at Bullseye. Thanks to you, Alan. You can check him out at bullseyeoption.com. Now for a couple developing